Gail.
So the inverted yield curve that we hear a lot about, or the hammock, could we talk a little bit about what that means and when it maybe means we'll see the downturn and maybe we'll go up again before we go down, and what your experience has been and the research shows?
Yeah, the staff had a really good debate about that. There have been a lot written about the fact that inverted yield curves in the U.S. Have been 100% accurate at predicting a recession. But the point is, within the next roughly 2 years, and Jude pointed out in her research that after the yield curve inverts, the market still generally goes higher. It doesn't hit a top sometimes 2 months, and I think it was sometimes almost 20 months out before the market will actually peak, and then you will go into recession. So it's a precursor. It's kind of a flag. Everybody has now started the clock and say, aha, somewhere in 2021, maybe to 22, we could have a recession. Doesn't predict what would cause it. There's always a first time that it could be wrong, but generally we do. I hate to say this because Glenn's going to be just bragging all week, but I tend to take my lead from the fixed income market and where bond yields go, and because I think it is a pretty good precursor for their expectations for equity growth. Now, the volatility levels of the market you saw in Makita's report, they had the Case-Shiller Price Earnings Index, and if I can find it in a little bit, but it was buried in there. I found it, INV 75. You can see that Shiller Index is all the way up at 30, well off the charts from history, and their chart goes all the way back to 1881. Just, you were there, I was going to say, born just a couple years later. And so from a historical perspective, the CAPE ratio would say we're in oversold or overbought territory. The traditional PE ratio doesn't show it as extreme, but that's why that's why we've turned more defensive off of neutral. Remember, I used to say aggressively neutral, but that's why we've turned defensive, slightly defensive. Here this summer with, I would say, sort of one leg leaning toward running to very defensive if, number one, the trade war really gets ratcheted up and up and up. We're certainly concerned about the mayhem and Brexit, but bless you, it looks like that I think, frankly, is going to get kicked down the road again and again. Europe, Germany, and France really are right at the edge of recession. So there's not any great place to run to other than to build liquidity, and we're going to have RMS fully funded and fixed income fully funded through this.
Thank you. That concludes our CIO's report. Thank you, Chris. Brings us to our next item, which is the review of information requests. Ms. Bell, do you have?
Thank you.
Thank you.
I guess I'll start by noting that the board is going to receive its annual investment cost report at the November meeting, which may cover some of the information requests by board members. But the additional items that I noted is for item 3, the asset liability study. Mr. Prasad asked for an analysis of cost saving by asset class. Ms. Miller asked about an analysis as to how the CalSTRS would achieve the recommended allocation for private equity and some of the co-ownership opportunities. Regarding item number 5, which were the semi-annual performance reports, Ms. Miller asked that risk measurements be considered and provided in future reports on benchmarks. Mr. Prasad, and I would say the whole board, reminded staff to make sure that all of the performance reports are net of fees consistently. Let's see. Regarding item number 5B, which is the board requested that Makita provide its report from a couple years ago regarding the value of private equity versus public equity via email to board members. Let's see. And for private equity, our private equity staff is going to have an offline conversation with Mr. Persant regarding the, different fee structure for some of our major private equity managers. So for item 6, regarding the active risk budget that was proposed, Ms. Yamamoto asked that staff share the ranges by other peers, but staff will also be recommended numbers for CalSTRS specifically. And staff is also going to provide the anticipated cost sharing by reducing managers under the active risk budget. And I think that is all the items that I have.
Thank you. So I just.
Were there any additional items?
That was.
Very comprehensive.
There were a lot, that was very comprehensive. And I just want to be certain that we're not unduly burdening staff to bring back information to the entire committee. If there are items that are specific to individual board members, I leave it to the discretion for those, the appropriate staff members to reach out to the appropriate board members individually. Some of that information, some of us have because of our history on the board. So we don't want to be overly burdensome with these requests, but at the same time, we want to honor and make sure that the requests that are reasonable are addressed in a timely manner to the specific board members, and that can be handled. Okay? Thank you. Thank you very much. And, oh, yeah, Gail, you're there. Yes,
Okay
Gail.
with you not to burden the staff, but the other request was an asset allocation run at 10% private
Yes.
equity? Is that
That's-
okay? If we
that's-
could just add that to the list, please. Thank you.
Very good. That, and Ms. Bell, thank you for the comprehensive note-taking. Appreciate that. So the next, item 9 is the draft agenda for the next meeting, and I just want to bring to the attention of the committee, the action items will be the asset liability study, which we deferred to action in November, so we'll take action on that. Kirsty will bring to us, and her team will bring to us the engagement plan of the CIS program, also the corporate governance / CIS program. A very important information item that we'll be receiving is the annual cost report, which gives us great insight into the cost of managing the portfolio, which was implemented a couple of years ago, and Alan referred to it as a landmark report, given its unique nature and insight into the total cost of running the fund. So it's a good report for us to have annual, and Deborah Smith and her team produces that for us, I believe. And Chris, anything else there?
I would add, Harry, if it pleases the committee.
Yeah.
Sharon had requested a while ago that RMS come back in open session and do a performance report, particularly on the hedge funds within that, so that we had that information for the public. So we would have an RMS review in open session and then the regular every other month one in closed session.
Great, that's fine.
Thanks, Chris.
Okay, very good. So with that, yes, Karen.
Are we going to do anything more with global equity next time? Or is that on here? Or is that within? Is that going to be part of?
We have item 3 on there.
Item
That's some
3?
Policy revisions, but we'll come back with that as an information item, as another education on global equities risk budget.
Okay, so it will not be consent and it won't be action.
Correct.
Okay.
Okay, thank you, Karen, for that. Anything else? Seeing none, that brings us to the end of the agenda. We will take a 5-minute break and then we'll come back into closed session. So any members of the public that should not be in closed session, we ask that you leave now. Good evening. Thank you.